Okay, we are live, right? Okay, hi
Yes, we
everyone.
are.
Hello. Okay, cool. Okay, so today we are going to talk about how to build your portfolio if you have 100K. Okay, so I will be sharing first, and Jing will be sharing second. Now, I just want to remind you guys, what we're sharing now is just for educational purposes only. It does not mean I'm not a financial advisor, and whatever we say, you have to think about it before you buy into it, and just don't follow us blindly. Okay, but today we have a lot of good stuff, and I will be sharing this tool to help you build your portfolio from scratch. If this today's lesson or this sharing will be completely designed for beginners. Okay, so let's get started. All right. So, a little bit of introduction on myself. I'm the Safe Investor. I've created this brand to really help people not lose money, and my slogan is to never lose money. For those who actually don't know me yet, I do have a channel teaching people about how to invest safely in stocks and in the crypto market as well. I am an Amazon bestseller. My book was number one in three categories in stock market investing, 90-minute business and money short reads, and personal success in business. Okay. So if you stay to the end, if you stay to the end, I will share this book to you through a very special link. Okay. All right, so I learned some stuff from the Warren Buffett family. So my investing methods are mainly built on Warren Buffett's value investing method, but then also according to his portfolio construction, I studied how he constructed his portfolio, and I will be sharing why he bought some of the major stocks in his portfolio tonight. Okay. And I've also been on a lot of webinars and seminars with other people. All right. So before we dive into portfolio construction, I just want to tell you guys, when we are investing or even when we're trading, there are three layers. Okay, so tonight we will focus a lot on the mindset. If you're a beginner, you do not need to worry about financial reports. You don't need to worry about reading the charts at all. It's all here. Everything you need is right here. We will be focusing on the mindset. Once you have the mindset right, then building a portfolio is very simple, easy, and fun for you. Do not need to know anything about numbers or charts. Now, however, once you have mastered all three of these skills, valuation skills, mindset skills, and technical analysis skills, then you can actually see how the investing world works. Okay, so let's get into it. So let me start with this important mindset. All right, so this is actually in one of my courses. So this is a true story. Some of you might have heard me talk about this before. So if you go to talk to some people, for example Warren Buffett, and then you look into his portfolio, he actually buys a lot of old and boring stocks. And if you go and ask Warren Buffett, why are you buying these boring stocks, or stocks that give you a lot of dividend, or old and boring companies, Warren Buffett would probably answer you and say, "Hey, I have a lot of money right now, so I don't want to lose all that money. So I'm gonna play it the safest way. I don't want to gamble. I'm not buying Tesla. I'm not buying Bitcoin. I'm not buying Ethereum." So that's what Warren Buffett would say. He's a very, very safe person. He wants to protect his asset. Now, same thing if you go and talk to this beggar on the street and he only had $1,000 left on him, and you ask him, "Hey, why don't you invest in Bitcoin? It's going up. It can make you a fortune." And this guy will tell you, "Are you crazy? Bitcoin is so volatile, I only have $1,000 on me. So why would I want to invest in Bitcoin or some high volatile stock?" So so you can actually see that the super rich people want to protect their assets, and the super poor people also want to protect their assets. But then you will see like people, when they're building their portfolio, when they're doing stock trading or crypto investing, they want to become rich fast, but in the end, they actually lose a lot of money on option, or maybe on cryptocurrency, and it's because they think they're not rich, and their portfolio is not built on this safe concept. Their portfolio is maybe too focused on Tesla, maybe too focused on Bitcoin, maybe too focused on Ethereum, and they thought it was going to go well, but then it just didn't do so. Okay, so this is the mindset that you should have before you start building your portfolio. You should always think about, if I had, right, $1 million, how do I protect and not lose this $1 million and make money at the same time, because you don't want to lose your hard-earned $1 million. Okay, so this is a mindset. Okay, all right. So this tool that I'm gonna introduce to you guys is called this portfolio visualizer. This is a very, very good tool, and I'll show you how to use it later. So let me share the link. Let's see. So I'm gonna post the link here. All right, so now we want to, so step number one, we want to compare ourselves with the S&P 500. So just for example, if you're very, very new to stocks, the S&P 500 is an ETF that has, basically it's a fund that had 500 strongest companies in the US. If you buy this fund, it means that you spread your money into these 500 companies. So we're going to use that as the benchmark. So put benchmark here, and we're going to use the S&P 500. Okay. So now at the bottom here, you can put up a lot of assets, like a lot of different stocks. But just for demonstration, I'm going to just put up to maximum of only 10 stocks. Okay. So now, if you're like a very, very new beginner, you have no idea what to do, and you have some spare cash on you, 2, 3. Okay, so that's $1 million, and you want to build a very safe and growing portfolio, right? You don't want to lose that $1 million, but you also want growth at the same time. So for beginners, how would you do this, right? So there are a few ways. So way number one, you can look at Warren Buffett's current portfolio. This is Warren Buffett's current portfolio sorted by the market cap. You can just choose the stocks from the top to bottom. You can maybe choose Apple, Bank of America, American Express, Coca-Cola, Kraft Heinz, Moody's, and Verizon. Warren Buffett is he's like the stock god, right? The god of investing. So I mean, following him most of the time, it's not. I mean, he could be wrong sometimes, but I mean, if you buy the first 10 shares of his largest in his company, you can't go too far off wrong, right? So just for example, I'm gonna build his portfolio. Okay, so let's see. So number one, right? Where is it? There. Number one, Apple, right? Apple shares. Okay, so about the weighting. Oh, the 41%. Okay, so let's do that. But we're not gonna build all his portfolio, so we'll adjust a little bit of the weighting later. But let's just put these in, right? So Apple number one. So I'm gonna put in AAPL, and then it's Bank of America, and then it's American Express. Okay, so if you're like completely new, I will show you how this will turn out later. Okay, don't worry if you don't know about these companies, because some of them actually don't know either. We will look into it and see what happens later. So and then Verizon, VZ. So let's just say like you're really new to investing and you have no idea what to buy, and you kind of want to like play it safe, right? So you buy into this Warren Buffett's portfolio, and then you pull like an equal weighting. So you can do equal weight over here. Right. So 6 assets. So that's equal weight right here, and then you only need to click on analyze portfolios. So that's your equal weight right here. You have chosen 6 companies or 6 stocks out of Warren Buffett's portfolio, and then you can compare it with the S&P 500 and see if you actually beat the S&P 500. So if you just look at this, with these 6 stocks right here, you can see that um, it had. So we want to always focus on the risk first. So you can see there was a drop in 2008 and there was a drop in 2000, right? But the red one is the S&P 500. The blue one is the portfolio chosen by Warren Buffett. So you can see actually it's kind of right here, around here is a little bit more resilient to the drop, right here is a little bit more resilient to the drop as well. So if you had just bought into these companies 20 years ago, you would have beaten the market very easily. Okay, so that's one way to do it. That's one way to do it. But then we also want to look at the dividends of the stocks that pay. So you also want to click on display income right here. You click yes, and then you can see that the display income is here. So this will be your portfolio income. So if you have like $1 million and you just invested like Warren Buffett or with Warren Buffett right now, that's the dividend that you will get. So you will be getting, like, if you invested this 20 years ago, right? Right now in year 2020, this is how much dividend you will be getting. So you will be getting another $1 million of dividend just by doing nothing if you had done this. Okay. But now, what's the strong part? Now, Warren Buffett is a person who loves cash flow. Okay. So cash flow means that these companies will pay you a good dividend. Okay. So, I mean, you look at Apple, Bank of America, American Express, Coca Cola, Moody's, Kraft Heinz, Verizon, even US Bank Corp. These are very, very old companies and they will pay you a lot of dividend. So now, what if you put in dividend reinvestment? So if you sorry, oh this is dividend reinvested already. So this, if you actually enable this, if you do like dividend reinvest, that's how much you'll be getting right now. You'll be getting, if you had invested $1 million 20 years ago and you followed Warren Buffett's portfolio, this is how much cash flow that you'll be generating every single year. Okay, so now we want to take out this dividend reinvesting, right? So let's see what happens. So let's first check if we can actually beat the market. So portfolio one, we still beat the market. And then even if we don't invest our dividend, so if you can see that because we didn't reinvest the dividend, so our shares become less. So you can see this portfolio, the income decrease. So this is the portfolio income. It came back down to like around 700,000, right? Or I can't. Okay, I can't read the number. All right, so it's about this, right? So this is one way to do it. One way to do it. The second way to do it, right? The second way to do it is you, if you're a completely new beginner and you have no idea what to invest and you want to beat the market, right? It's very, very simple. The second way to do it is you would want to check out the S&P 500 holdings. So very, very simple. S&P 500 top 10 holdings, top 10 holdings, and then you just put it in. There we go. So let's have a look. All right. So what do they have? All right. Okay. So the Apple, Microsoft, Amazon, Google, Facebook, and Tesla. Now they have Tesla. So let's go back to the portfolio right here. So they have Apple. Oh, okay. So Apple. What's the other one? Apple, Microsoft. So Microsoft. And then Alphabet. Alphabet is basically Google. They're the same company, so I'm just going to use one, GOGL. And then they have Facebook, Amazon and Facebook. So AMZN, and then they have Facebook. And then they have Tesla. I'm going to add more. That's LA. Berkshire Hathaway, this is Warren Buffett's company. So that's class B, so BRK.B. So this is Warren Buffett's company. And then they have NVIDIA, NVDA, and then NVDA. And they have JP Morgan. JP Morgan. Okay, JPM. All right, so I'm gonna do, let's see, equal weight, and then sorry, nope. So I had 10, right? I'm gonna make it 10. 10, sorry. Oops, no, it doesn't have that. Da-da-da. Okay, it was Microsoft. Okay, so it was Microsoft, Google, Amazon, Facebook, Tesla, Berkshire Hathaway, Nvidia, and JP Morgan. Okay, so now we're comparing these portfolios. Oh, which one am I missing? Apple, Microsoft, Google, Amazon, Facebook, Tesla, Berkshire Hathaway, and Nvidia. Oh, which one am I missing? Oh, we're missing another alphabet. Okay, so let me put that in then. All right, so GOG. Okay, 10%. All right. So we want to check to see if we can actually beat the market. So right here, let's take out the dividend reinvest, right? We don't want that for now. We can see that if you had invested it in 2013, portfolio 2 will actually beat the S&P 500 and will also beat the Warren Buffett's top 5 portfolios. But then, because Warren Buffett is a person who likes a lot of dividend, so you can see this dividend growth rate is faster. Portfolio 1, which is Warren Buffett's top five or top 6 stocks, will give you more dividend. Okay, so this is way number 2, and then we want to also check to see if what will happen if we put in the reinvest dividend. So we can see the red one is portfolio 2, which has the major tech stocks inside, will grow a lot faster. And then also, oh wow, this dividend is actually catching up in this year. So, but then you can also see this dividend, the blue one right here, which is Warren Buffett portfolio, is always higher because Warren Buffett is a person who loves dividend. Okay. So now you can go play around with this a little bit to see what you want to buy, right? Now, if you have no idea what to buy, right, you can also use ETFs to compare against ETFs. So this is Vanguard. Vanguard usually they give you a lot of like cheap ETFs, and their ETFs are good. Now, if you are a complete new beginner, right? They have divided the ETFs into different sectors for you to invest in. So, for example, if you believe in the communications sector, you can buy this ETF called VOX. If you believe in like energy, maybe right now because crypto is using a lot of energy, you can buy VDE. So that's it. That's the energy ETF. If you believe in financials, you have the financial ETF, and then you have information technology ETF as well. So if you're not too sure, and if you're new, right, you don't want to take too much risk, and you believe in a certain sector, then you can buy this ETF. Okay, so I will share this link to you guys, so you can play with that a little bit. All right, so now how do I want to build my portfolio like for real? Okay, so let's start everything from the beginning. If you don't want to like follow people and you want to really test, right? You want to test to see how you to see if you can actually beat the market. Okay, so let's go back and rethink this whole thing. Rethink this whole thing. So now here's the mindset. You can have a different perspective. But let's just see. So maybe if you're like a very very safe person, you prefer cash flow more. You like dividends, right? You will want to think about what is a very, very old company which has been in this world for maybe 20, 30, or even 50 years. Okay, so generally speaking, these companies, if they can survive this long, then it means that they have gone through the two financial crises, they have gone through, Cold War, World War II, and all that stuff. And if they have been paying the dividends well, then maybe it's a good company. So just for example, let's pretend I'm very, very new. Actually, the first company that I think will last for another 50 years is actually McDonald's, because I think that McDonald's is going to last for another, I don't know, 50 years. Okay, now, so we haven't put in the waiting, right? So don't worry about that. Next company that I kind of like, if I want like dividend and cash flow, I like Johnson Johnson. It's a very very old and boring company that has been around for a while, for a very very long time. Now, I do like technology stocks as well, and to me, I think that Microsoft has been around for almost 50 years, and I think that Microsoft is going to be around for another 50 years. Okay, it's just for me, just from my side. And also, I personally like Nike, and Nike has been around for a long time as well. And I do see people like wearing Nike stuff everywhere, okay, everywhere. Also, another brand that I don't use, but I know that ladies love is Louis Vuitton. So I'm gonna just put that in because I know that it's gonna, these luxury stuff is gonna last for a really, really long time. Okay, now I want to maybe put down like America's second biggest telecommunication, or maybe even the biggest one. So the biggest one is AT&T. The second biggest one is Verizon. So these two are the America's two major telecommunication companies. Okay, now some people use Netflix a lot. So maybe I'll put down Netflix. Okay, and some people are saying, oh, maybe I'll bet a little bit on Tesla. And then lastly, I'm just gonna say I'm gonna just put in maybe a bit of the S&P 500 to help me diversify a little bit because I don't know what to pick now. Okay, so now let's talk about the weighting. So when we are investing, we always there's one principle. You want to put more money into some things that you are more certain, and you want to put less money into some things that you are less certain. So just for example, Tesla right now. So if we do equal weighting, I'm gonna move around. Maybe Tesla, I'm gonna just put in 5% because it's kind of like a unknown future thingy, right? So and then I'm gonna add that 5% to the S&P 500 because it just S&P 500 is like it's the market and the market is very, very safe. Okay, right. Now I also want cash flow. Now older companies will generate more cash flow for me. So Netflix is relatively new, so Netflix, it's kind of like a tech stock. So I'm gonna tune down that portion to 5%, and then I'm gonna add that 5% to AT&T. It's a very, very old company which pays you a pretty good dividend, right? Okay, and then let's see, Johnson Johnson. These are actually pretty good. Okay, luxury brands. I'm not too sure about them, so I'm also gonna tune down that a little bit, and then add that onto the cash flow side, which is Verizon right here. Now I'm happy with Microsoft. Microsoft is very old. Nike is fine. Johnson Johnson, McDonald's, they're all fine. So let's say, just for example, if this were my portfolio, I'm going to benchmark it against the S&P 500, and then I'm going to analyze my portfolio. So that's what it will look like, and then we'll see. So okay, so it means that my portfolio actually did, if I follow this rule right, I would actually beat the S&P 500. Um, and then let's look at, so my full return will be 21%. That's my full annualized return, 21%, which is not bad. Warren Buffett makes about 20% average every single year. As the S&P 500 will make about 14%, which is pretty good. Okay, so now this will actually be the dividends. Okay, you don't see the S&P 500 one, so I'm gonna portfolio two. This one I'm gonna make it 100%. S&P 500, and then I'm going to take this benchmark away to help you see. Okay, so now you can see portfolio one beats portfolio two, and then you can see this dividend also beats portfolio two, which is the S&P 500. Okay, so now this is a very, very useful and simple tool to help you get started. But when you build your portfolio, you would always want to focus on safety first. Okay, and that's it. So go ahead and play around with this portfolio. And there's only one rule when you are trying to build your 100k portfolio. The rule is you want to keep that 100k. You don't want to bet too heavily into things that are uncertain. You want to put more money into things that you are certain, and put less money into things that you are uncertain. Okay, and with this portfolio built, any newbie can do this, and you can compare your results against the S&P 500. Okay, I hope this sharing is helpful. Just a little bit of something at the end. So I do have this is my book. This is Amazon. If you have the Kindle version, you can read this for free. I'm just gonna post it here. You can't read the free version, or if you want this book, sign up through here. I do stock training, weekly live updates, and training, and I will post this book to you for free. Okay, so I'll post this here for free. Okay, thank you. I hope this hearing is helpful, and back to you, Jingyi.
Okay, thanks, Ken. Wow, this is the first time seeing this portfolio visualization. I think
Mm.
I'm going to use it for my own portfolio visualize so that I can visualize that in a pie chart and how can it perform and how is it like too much weightage and all this. So I totally believe in risk management and how do you manage your portfolio according to weightage. Do not ever put everything in one basket. So that's how I Ken and I hold the same belief. So before I proceed, right, can I get your sentiment, like whoever is watching this live, right? Can you guys please help us to like and share so that more people can learn from this? So Ken has been sharing a tool for us to visualize our portfolio on how do we actually start our own portfolio if we are brand new. Even um, for a seasoned investor, you can also use this to visualize your own portfolio. So it is not just for the beginners. Even for me, I'm going to use it later. But today, I'm going to share with you another very powerful tool on top of what Ken just shared to us. Yeah, right. Just let me share my screen. Yeah, you can see the screen already. Right. Just let us know in the comment below, right? If you guys have any questions, if you guys want to ask questions, want us to see any chart, just type in the chat below and let us know what you want to know more about the portfolio. So without further ado, let me start. Yeah. Again, this is just for educational and sharing purposes. It is not for financial advice. This is what I will do, and this is what I am doing now. So I'm just sharing my experience to you. Same like Ken, similar like Ken. We are actually from Buffett Online School. We learn from the great Buffett family, and yeah. But I have uh, tweak a little bit from the value investing of what Buffett has actually shared to us. Let me just run through with you my criteria, right? In my opinion, whenever I'm constructing a portfolio, there will only be uh, 10, 10 shares, 10 shares or 10 units of things I'm buying, right? Be it in crypto, be it in stocks, I will just buy it for 10 because more than that, it is quite hard for me to actually manage, right? But then having said that, right, let me have a pen. Uh, right? So I have 10 slot, right? But then having said that, I will have 10, not more than 20 companies to actually manage, to actually review, right? Be it companies or crypto. So I will only have 20 uh, ticker symbol for me to actually manage because more than that it is very hard for me to actually read their financial report, to actually understand their company, to actually keep up with them. Every quarter they have like quarterly reports and all this, and as an investor, as a responsible investor, you will need to actually at least read the summary of what has been said and what is their performance, right? All right. So before you actually continue to invest in them, or if you want to invest in them, I will always have not more than 20 companies in my watch list. I will filter out if I think that I have a better company. I'll bring in new one and then I'll remove the old one. So good risk management is very important for everyone else, right? So we don't put everything in one basket as we always mention. For me, every I will not go more than 10% of allocation for one company or one crypto, right? So that I can risk manage my own. Uh, my own, it will be better for my appetite lah. Everyone has their own risk appetite, right? For me, I'm just like you having chili, right? Not everyone likes to eat a lot of chili. For me, maybe just a little bit. So 10% will do. So every company I will just have not more than 10%. Even if it grow more than that already, I'll just trim it after that. Yeah. And then always invest in good companies and your circle of competence. What do I mean by circle of competence? For example, if you're working for, let's say, Lazada, right? Your circle of competence is in software as a service. Your circle of competence is in tech companies. Your circle of competence is in uh, a very young company, a high growth company, high potential company, right? Uh, on the other hand, let's say you are working for Apple. Apple is also tech stock, but then it is a very stable company. It is a cash generation company already. Compared to Lazada, it is still a negative income company, right? They are still not positive. So Lazada is actually a subsidiary for Alibaba. So if you want to buy that, maybe you can think of Alibaba, lah, right? So and then do not leverage without knowledge, right? So as a beginner, right, we are like a baby. So as a baby, we are learning, so do not go too young, or if you like, go too aggressive into anything. Just go, have a little bit of patience, have a little bit more knowledge by reading. Go to YouTube, learn from all the good YouTubers, and then you can actually start. You can start by following them, and then as your knowledge grow, right, maybe you can build your own portfolio. And yeah, of course, always educate yourself and always invest with a good community. Have a group of people to actually learn together, invest together, instead of hearsay. Right, a lot of people will say, "Oh, this one grow like 10% already. Let's buy. You'll go more. You'll grow more." Yeah, this is a good company, but then you don't know anything about this company. It is very hard for you when you invest and imagine the company drop by 20%. What do you do? Do you cut loss? Do you hold on? Do you invest more? So right, so if you have a very strong conviction in the company, you will actually maybe put another tranches of your portfolio inside. So we do not go all in at once. We go by tranches. Yeah. Right. So next, okay. So uh, for my investment philosophy, right? I learned through this guy called Nassim Taleb, right? Nassim Taleb is a very uh, very intelligent person. So I've read most of his books, and this is the book that I would like to recommend to you. It's called Skin in Game. Basically, the gist of this book is like a barbell strategy. Inside the book, he taught you about barbell strategy. So nothing in the middle. So have a look at this one, right? Nothing in the middle means, right, you do not even invest in mediocre company, right? You only invest in the safest possible, less risk and reward perspective. Means you only put your money into the most extreme left, right? I call it this left, right, and this is right, and the most extreme right. There will be never in the middle. We do not put any money in the middle. We do not want to invest in mediocre company. We only put money in very very safe in order to protect our funding or our capital, and also in another one is like higher risk but higher reward company. For example, cryptocurrency, right? Startups like Shopee, right? Option strategy. Over here now, let's not talk about options first. We only talk about like mindset, yeah. So you can, and then for the safest part, right? You can put like, you can hold cash, you can hold um, hedging things like gold. You can also hold like your your housing, your buildings, like your properties, right? This might be one of the safest possible investment. So in my view, right, if I hold 100K cash, I will put like 60% of my portfolio into the safest possible way, and 40% for me to actually have an exponential growth to the portfolio, right? So the main point for you to invest is actually to grow your wealth, to make money work for you, and also the another point is to actually beat the market. If not, you can just put 100K into S&P 500 and then you will perform as per the S&P 500. Why not? Why what that would be a very good strategy also. But then if you are choosing stocks and choosing cryptocurrency to buy, you're actually trying to beat the market, to actually beat the inflation. And yeah, you have to be very, very wise with your money, right? So next up, how would I construct my portfolio? As I said just now, I would put 60%, pardon my drawing very ugly. So I put 60% into a safest possible way and 40% into a potentially high growth stocks or cryptocurrency. Right. So number one, so this is so I put left side as safe, right side as higher risk management lah. So in that case, right, I will put less left side into ETFs. I'll put 20% of my cash into ETF, and then I'll put 20% into cash rich stable company, right? So what is cash rich stable company? In my opinion, this is just my opinion. AAPL Apple is a cash generation company, right? They are a cash cow, right? Look around you. If you have like handphone, iPhone, you have like earpod, and then if you have like iPad, these are the consumer discretion. A lot of consumers has been using it already. It means that and looking at the recent years, Apple has been doing. They are only giving you better cameras and all this. Yet everyone still need to use, still are buying their products. Why? Because they have a very strong ecosystem and they have a very strong product. It never it never spoil easily. It is a very legit and a very reliable product, and yet it's very nice, very classy and all this. So this is how I classify it as. So they generate a lot of cash. So I said I put this as a cash rich stable company, right? Then 20% you can put in high growth stocks, right? High growth stocks, in my opinion, it would be like Microsoft, right? Uh, right, Microsoft, MSFT is their ticker symbol. So Microsoft, you can also say that, oh, it has been there for a long time. It is a cash rich company, right? But then to me, right, I'm very interested into their AI space, right? Similarly to the Google, they are also something that we use all every day, right? Everything that we are using is actually for our search engine search, our YouTube, they are all Google. So I will always invest in the things that I always use, right? I use it on daily basis. For example, Facebook can also be uh, in between of high growth and cash rich company. Also, Facebook has a very good visionary has a very good vision on the future. Like you can use metaverse as part of your daily life already. Have you watched like player one ready or something like that? It is something that you just wear a goggle and then you can just do everything in your life just through the goggle, right? And then I will and then after also all of this is actually on my left side. They are very, very strong company. They are also high growth company. They are cash rich company. So this is my risk appetite. You can also put your high growth into your right side. You can also put it as a right side. But for me, put it as a left side. And then you can put 30% into crypto, for example, BTC, and then for example, ETH. So later I'll show you how do I actually choose crypto and also choose the stocks that I'm looking at. And then also I'll put 10% into potentially high growth company, potentially disrupting the whole industry, right? They'll change your view about the energy usage. They change the view of your life. For example, previously our life doesn't surround around YouTube. We actually have more interaction outside, and then now our interaction are mostly online because of the pandemic also. And thanks to Facebook, we can actually interact with everyone else through online medium. We can can talk to through Zoom, and now currently we are using Facebook also, right? But then, for example, let's think about the near future, right? What is the next growing company? In my opinion, it will be something like Tesla, right? Tesla has been changing people's life, changing what we think about cars. So we are slowly moving into a more environmental friendly stuff. So Tesla is working very very hard towards that vision, right? So something like oil and gas, like Shell, even for like Toyota, for Honda, and all those BMW, those type of companies, they are slowly losing their edge to Tesla, right? So Tesla is in a very very new space. They are in a blue ocean, if you like, and all those like combustion engine companies, they are like in the red ocean where there's too much competition. Tesla is in their own space. It's only racing against themselves. They are not racing against others. They are not comparing against others. So they are always growing, right? So these are the companies that I will put into my portfolio, right? So next, so if I want to like construct my portfolio, right? So let me just go back. Let's cut this. Right. So how do I actually put this one? Right. Just now we said like 20% ETF. So ETF, like right, I will put the easiest one as a starter. We will always look at SPY, right? So let me just put the ETF. Huh? So SPY. We can also look at SPYG, right? SPYG means the higher growth side of the SPY. They pick up certain numbers. SPY consists of 500 companies. So SPYG consists of just like 100 plus companies of the top companies, and then they put more weightage onto those companies. So if you want higher growth, you can actually use SPYG. As I mentioned, most of our life revolves around like technologies, right? So we can also look at technologies ETF like QQQ, right? These are and also the QQQ is actually higher growth than SPY, so you can play around with that, and then you can put 20% of your portfolio into that. You can slowly buy your shares. So today we are not talking about technical analysis, right? So you can next round we'll show you how to do this. So you can go by tranches and all this into these ETFs. And then next up, cash rich stable company, right? Cash rich stable company, right? So also 20%, and then I'll put like AAPL. So how do I find all this company, right? As a starter, let me just show you. Yeah. So I go to ETF.com, and then I type SPY, right? I go ETF.com, and then I type SPY. I scroll from here all the way down, and then I want to look at their weightage bar, right? So as you can see, their weightage are mostly in technology stocks, consumer cyclical, financials, healthcare, blah blah blah, right? All those like energy and all this are getting very very small percentage, and they are very heavy on technologies. Technologies like what? Apple, Microsoft, Amazon, Google, Facebook. These are all the things that we know, and we have been using it, right? Like e-commerce, Amazon, Google, YouTube, Facebook, right? Tesla is something that is what I call um, um, uh, disruptive company. So if I just use this 1, 2, 3, 4, 5, 6 company, right? Let's just put 6 company over here, right? Just now I mentioned I will not go more than 7, more than 10, right? So over here, I'll put Apple, and then high growth company, right? I will put MSFT, Microsoft, Google. Um, I can also put Amazon over here as a cash rich company. It's 1, 2, 3, 4, and then maybe 5 and 6 now. Oh, here. Okay, so, let me see. Oh, Facebook, right? Like if you want to say Facebook maybe a high growth, okay, 1, 2, 3, 4, 5, and 6, right? One of the ETF. I only choose one of the ETFs, right? And then it will choose like crypto, and then I said I want 30%, right? This is just my liking. That I'm comfortable with 30%. So over here, I have a total of 60% of my very safe and very healthy company already. I want to have some risk into and want to hire like exponential growth. So how do I do with it? I am I want to do it safe, so I go to Coin Market Cap. Right. So I go to Coin Market Cap and yeah, sorry, Kawanaka. Right, Coin Market Cap, and then I go to ranking, right, cryptocurrency ranking. Yeah. So over here, I will choose the top 2 to 3 uh, companies, right? 2 to 3 companies. So over here, the 2 to 3 companies is actually 2 to 3 crypto will be. I will actually choose just two as a starter, right? As a starter, if I don't know anything, I will choose the safest and the biggest. As you can see, their market cap is so big, like 39 billion. Right. Sorry. The market cap is 1 trillion for Bitcoin already. So it's 1 trillion market cap, and they are as big as our big boys like Amazon and all these companies already, Apple and all this, right? So I will put like BTC maybe 20%, and then ETH maybe 10%, right? You can do more research about it. Just a brief summary about BTC is like there are scarce um, uh, 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 like investment to me, because they are only like 21 million of unit, then they are, and not more than that. So you can't constantly print BTC. You can only mine it up to 21 million, and then that's about it. There's nothing more you can mine already, right? So and then ETH, there's a utility usage about it, like NFTs and all this. So you can read more about it, right? Also, you can read about Nassim Taleb book about crypto. He has also a book about crypto also. And then 10% more I will put in disruptive companies. Right? Companies and like Tesla. I am a fan of like Elon Musk, but this is just me. You can do more research about him or his company. Then bear in mind about Tesla is like as disruptive as it is very very volatile, because it is disrupting the whole ecosystem of the previous ecosystem. For example, imagine you are having a very very good amount of pie already, right? Imagine you have a imagine this is a cake, and then everyone has their own share already. Suddenly someone just come in and take about like 40% of your shares, and then that's how you disrupt your companies, and you make them like have to go leaner, and if they don't come with the new ideas, they basically will go bust, right? This is how disruptive companies will come and disrupt the whole industry. So Tesla, and then maybe you can look at PLTR. This is again, this is just me, yeah. And also you can look at Shopee. Shopee is disrupting the whole buying behaviors for whole Southeast Asia, and they are constantly growing, and they are also having like they are planning to build like digital banking, right? So these are how I will like construct my whole portfolio, and this is the total amount of it will be like 100% of it, and and most importantly, with this 100%, I can actually sleep well with it, because I don't actually have a leverage, and I can just let them do their thing, right? Let you, because you have been working like 9 to 5 already, right? Let your money work for you. Similarly, if you just have like 10K portfolio, right, you can also use this percentage to actually build your own portfolio, as your portfolio grow, right, and then you keep changing, keep reverting back, keep pulling it back, and rearrange your portfolio again as you're liking, and yeah. So that's my sharing today, and yeah, if you guys have any questions, please just put it in the comment below. Yeah. Ken, do you have anything else to share?
Nope. That's it. I think. All right. Well, a few mindset stuff is when you start investing. If you're like new, um, you always want to start with something that you know. You always start with maybe like how I did my portfolio. If you're completely new, you start with something that you've seen for a long time. It's been around there for a long time, and you can see you think that it will be there for another like maybe 10 or 50 years. That's the rule number one, because you want to be safe. Like what I put on my first list was McDonald's, because I eat McDonald's and I see everyone likes McDonald's. Yep. So
I
it's
love it.
the yeah, that's the safe
Yeah.
mindset. Yep.
Mm. Always invest in companies that you always use. That is the easiest way to actually kickstart, right? Like McDonald's, Apple, Facebook, YouTube. YouTube means Google. All are the things that you can actually look around you. Everything are actually a hint, so you don't ever need people telling you what to buy already. You can just look into it and then you just go and do more research. You can Google about them, and yeah. So that's how you go get started. And I hope
Oh
you guys will go to the moon.
yeah. Oh, there is another reason. Okay, so this is actually one very powerful mindset that I do share in my book. So if you have time to go read my book, um, if you buy things that you don't know, let's just say some guy bought into Yahoo or Nokia 10 or 20 years ago, how would they feel now? Because he had this person, if he had no idea what Yahoo was doing, no idea what Nokia was, or no idea what Kodak was, he would be like crying right now. And it's because he doesn't know when to get out. But if you like buy into things that you know, like maybe like McDonald's, right? And then someday you see KFC taking over McDonald's, or see Burger King taking over McDonald's, then you know you need to get out. Okay, so that's another very important reason. You always buy things that you can see or touch, and or that you really know well. Yeah,
Yep, it is no
yeah,
rocket science. It is just your observation and your constant learning. Just find your own community, and yeah,
yeah,
hope you
yeah.
guys will learn something from us. And if you guys have anything else that you want to learn or anything you want to ask, just type in the comment below. We'll reply to you whenever we see it. Right.
Yeah.
With that, thank you very much. Thank you for your time and have a good night.
Have a good
Ciao.
night. Okay, stay safe. Bye bye.